Welcome back. You're still tuned into Midcap Radar. Well, Signature Global, that's the stock on our radar, reported its Q3 operational update earlier this morning. Their pre-sales are up 47% on a YY basis in Q3. Their number of units sold is up 8%. Collections are up 46%. And at the 9-month mark, the company has seen a growth of pre-sales by 42%, and their area sold is up 9%. And their net debt has slightly reduced on a YY basis as well. The stock is reacting positively. It is up 4% in today's trading session in an otherwise weak market. That is, the CEO of the company, Rajat Kathuria, is joining us now to discuss the trends in terms of demand and, most importantly, the outlook going forward. Mr. Kathuria, good afternoon. Thank you so much for joining us. Well, the street seems to like the update that you've given, and it is a strong one as well. Can you give us a sense of what FY24 is looking like? You gave a guidance of 4,500 crore rupees, but do you think you can exceed it considering the current demand trends? What is the outlook?
So, thanks for inviting us to your show. We are witnessing a very strong uptrend in sales. So right now in this cold Delhi winter, real estate selling like a hot cake. So we are fairly bullish on the performance for the entire year. We gave a guidance of about 4,500 odd crores for the full year. We've already crossed about 3,100 odd crores. We are fairly comfortable with the guidance number which we had given at the middle of this particular financial year.
Okay, so holding on to that around 4,500 crores in terms of guidance. Rajat, thanks for joining us. This is Pavitra. But the pre-sales that you have for this quarter, the around 12,063 crores, could you just break that up into what has been the affordable, the mid segment and the luxury part as well?
So see, we've been focusing, Pavitra, on the mid-income segment itself. So if you look at this sales of about 3,100 plus crores, we've sold about 3,100 odd units. So effectively, it's about 1 crore per unit, at which we've sold. The sales have been across 5 or 6 of our projects. So it's not a concentrated sale for a particular project. It's a diversified set of sales we've achieved. And all these projects are in our core markets, which is Gurugram and Sohna. Also, the realization per square foot has gone up. So same period last year, we were selling at about 7,500 odd rupees a foot. These sales have gone at about 9,800 odd rupees a foot.
Oh, okay. So 9,800 rupees per square foot. So there's definitely a price hike that has come by. Is this something which will continue, Rajat? Because the fact is, we've been speaking to a lot of real estate companies. Last 3 years since COVID, we've seen a sharper price increase. But if that continues, do you think demand will stay as is? Are you looking at any more price hikes?
So see, this price hike vis-a-vis the previous year is because of 2 factors. One is in general increase in industry pricing of real estate. Second is, our composition of Gurugram sales was much higher than the Sohna sales, during this period. That's also one of the factors why, the realizations went up. We would, want to do only moderate price hikes in the coming years and try to achieve more volumes because, this is a highly supply constrained situation in the market. So we are more volume believers than, value seekers.
So when you say moderate price increase, can you give us a number? What would that look like? High single digits? Would it be mid single digits?
It would be more inflation, around, like 5 to 7% sort of price hikes, which we are looking at.
Okay, 5 to 7% for price hikes. Rajat, we also want to talk to you about the new launches, the pipeline. Take us through a little bit of what that looks like. What can we see in, in this quarter and maybe in the next year as well?
So over the next couple of months, we are coming up with 2 large projects, almost 3 million square foot each. The first one's going to be just next to the Dwarka Expressway, which is also expected to get operationalized sometime soon. So our first project's going to be, across very next to Dwarka Expressway. And then we are coming up with, again, another large, 3 million plus square foot, project on the southern peripheral road. So we are very bullish regarding, both of these project launches. So
okay.
That will help us, achieve sales growth in the coming quarters.
Okay. So You know, while we're talking about new project pipeline, what is also important to see in a real estate company is the cash flows. You had put out around 300 crore rupees in terms of land acquisitions in first half. What is the second half and FY25 looking like? What is the balance sheet after all these acquisitions that you've made? You have some joint development projects as well. So how much do you pay to landowners? Can you split that for us?
So see, we are currently doing about 70 million square foot of developments, which are expected to be completed by end of fiscal year 2026. In addition to that, we have a pipeline of almost 27 million square foot. Bulk of that is on land which is owned by us, and there's a much lower proportion of joint developments within this forthcoming category of projects. So we have a fairly good position in terms of land inventory, and this will fuel next 2 to 3 years of project launches on a back-to-back basis. All these land is also in our core markets. We've identified 2 or 3 micro markets within Gurugram and Sona region which are a little core to us. So a lot of this inventory, almost like 80% plus, is in our core markets. What we've always followed as a principle and intend to do that in going forward as well is that on an annual basis, whatever should be our operating surplus, our net debt should not exceed that operating surplus. So talking about the current year, we've given a guidance of collections of about 2,900 odd crores for the entire year. We've already crossed about 2,100 odd crores, and we should be comfortably achieving our annual guidance. So usually we've earned about 35% we see as an operating surplus on the collections front. So this surplus is before any investments into land. So, our net debt number will not exceed that. And that denotes, the health of the balance sheet of the entity.
All right, that's good to know. Just one final question. You were talking about how, the sales have been spread across a bunch of your projects. Can you just tell us what is also the unsold inventory that you're sitting on right now?
So at the start of the year, approximately, we had about unsold inventory of upwards of 4,000 crores, of which we've almost sold around, 3,200 odd crores. So unsold inventory is, the shelves getting empty very fast. So we are coming up with new launches and filling up the shelf.
That's the case across the board. I'm just wondering who are these people who are just going ahead and buying? What is fueling this demand and whether it's sustainable or not? Last question before we let you go, Rajat. Any expansion plans away from your core markets like Gurugram and Sona?
So Sonal, there's a lot to achieve, in our core markets. So whether it be the product or it be, the geography, we intend to just focus on mid-income housing and within Gurugram and Sona region in the foreseeable future.
Okay, all right. Rajat, thank you so much for joining us today and taking us through your plans going forwards. That's the Q3 update coming in from Signature Global. Very strong numbers, and the street seems to be liking that as well.